Good evening,
Look at us
everybody.
with the
This is
fancy
Maurice with,
digs.
yes. Hello, can you hear us? Let us know in the comments if you can hear us loud and clear. I'm excited. Tonight we're going live with Homebuyer Academy. You guys are chiming in. I'm your host, Maurice. We have Chad in the building.
What's going on, good people? All
So
right.
let's see. We'll
Hey,
give you
brother, sorry for
a
the
couple.
technical delays, man.
Mhm. No
But we
worries,
are
no worries.
here.
We are all, yes, sir. Let's go.
Just making
All
sure.
right, let me cue up. Sorry,
All right.
the sound again. Give me just a moment here. I'm gonna cue up the tonight's lesson, and we're just gonna go from there.
All right. So real quick, before we even jump in, right, I want to just let everybody know what our mission here with Homebuyer Academy is to really give people who have that desire to buy their first home or their second home or their third that space where they can exercise all of the questions that they have, all of the concerns and uncertainty, so we could demystify the process. Everything from your credit to who do you need on your team to how does the financing part go. Every phase of the process. So I've been in the industry since I was 19 years old. And for those who know me, you guys know what I've done. For those who haven't, I've had a team of over 100 loan officers that worked under me. I've started investing since I was 21 in real estate, and I've done a lot of different kinds of transactions. I've won in many different ways, and I've had some big losses as well. And I want to be able to share the wins, the losses, and everything in between to help you get to your next phase. And the reason why we have Maurice with us is because a big part of this journey is the mindset, but also the money. And he's the man when it comes to both. So just tell him a little bit about your background, what you do right now, and you know how the banking world has impacted how you impact Homebuyer Academy.
Yes. Well, I've been. Thank you, Chad. I've been in the banking industry for about a little over 7 years as a business banker, and I've helped also as a liaison for our mortgage department. I was used to work for Wells Fargo, and so I have quite a few years partnering with realtors and mortgage brokers within the company. We partnered with realtors outside of the company, and I work directly with the mortgage team as a business banker. In addition to that, I've just been a steward of God's word. So on the ministry side, I've helped wherever I've served in that capacity as well. And then just being a man of business, a man of sales, been in sales basically all my life. And so sales is a big part of the real estate industry. You know, knowing your product, knowing how to articulate your product, knowing what your buyer wants. And so all those attributes we brought together to formulate what we have here before you as Homebuyer Academy, bringing the best industry knowledge of the entire industry the best way we can to you guys, and using our experiences, our expertise to give you guys a quality product, and not just in Homebuyer Academy itself, but just the real estate industry altogether.
All right, cool, man. So that's a beautiful thing. So we created this for you guys. Everyone who's out there who wants to buy a house, there's a space for you in Homebuyer Academy for you to be able to really learn, be empowered, and build community. So for everybody who hasn't, please join our Facebook group. Can you tell them about the Facebook group, Mo?
Yes, so we just Facebook group. I'm sorry, I was just going live on Instagram, but we just launched our Facebook group for 2025, the Home Buyers Club. It's not just for first-time home buyers. It's anybody that wants to learn about real estate, anybody that wants to buy another home or future home. If you just want updates on what's happening, the current events, you want to join our group. I'm going to drop a link here shortly so you guys can go over and join our group live here. But yeah, let's get right into it. I'm gonna share this really quick. So look on that on your
And if you're
comments.
watching on YouTube, go ahead and hit that like button for the algorithm so other people just like you who are looking to buy homes could learn more and be a part of our community as well.
Yeah,
But
and I'm
yeah,
gonna show
without
that right
further
here,
ado, man, let's jump on
really
in.
quick. Perfect. Let me go back to where we were. Perfect. So tonight, uh, and this is gonna be like I'll say, Chad, this got to be your wheelhouse because there's a real estate side and there's the loan side, and so we're talking about your home loan in that capacity. So most of the time I'm going to refer to Chad, but as a buyer myself, we're going to collaborate on this one here. Our agenda for tonight, we're breaking down as we always do. If you had a day like mine, it was crazy. So I had to slow it down just to make sure I'm in the best space to give you guys what you need. So we're going to talk about a little bit of meditation, talk about a little bit of grounding, getting focused, bring it in, reeling it in, focusing on what we're going to do here today. We're going to give updates. Anybody that's been watching the past couple of weeks, if you're watching live, go ahead and put in the comments your victories for this week. Then we're going to get into the lesson, talk about the loan process. Then we're going to actually got some questions or take some questions from you guys. So we're going to start off with just quick time getting focused for today.
Right. So we're just gonna take some time to just breathe and get present to the process because I know our days get crazy. But again, when those moments come up where we need your attention or you need to apply your attention to something, it's important to take a stop, to take a breath, and to really allow yourself to be present. So we want to be totally present with you, and we would love it if you're totally present with us, if you can be. So we're gonna just stop, take a moment, and just take a few deep breaths in, just so that we could really get totally caught in this moment and build on your dream of home ownership. All right. So if you're in a place, if you can close your eyes, if not, that's cool. But what I want you to do is to just slowly take in a nice deep breath for a count of 5. Okay. And when you get to the top of that breath, just go ahead and hold it. And just go ahead and let it out slowly for a count of 5. 1, 2, 3, 4, 5. Oh, great. And then I want you to inhale and take another breath. Nice and deep. And hold it and release. 1, 2, 3, 4, 5. And on this last breath, I want you to take in all of your visions for the dreams for your home, your most precious part of the house. I want you to soak it all in this next breath. And then as you hold it, just bask in that vision of your new home. And as you release, I want you to release any doubt, any concerns, any limitations that are in your way right now. All right. And yeah, that's beautiful. Thank you guys for taking a moment to get grounded with us, to get present with us. And let's just jump into the next phase, Mo.
All right, so if there's anybody, I see a couple people watching from YouTube and Facebook. If you get anything, and it don't even have to be pertaining to this. We're gonna do a little small tweak. If you have any victories from last Tuesday to this Tuesday, your kids brush their teeth every day. You saved $20 in your savings. Whatever it is that you want to share, go ahead and drop a comment below because we're going to celebrate wins. A lot of what we do is not only teach you along the way, but show you how to celebrate you every step of the way. Because every small steps get you closer and closer to your home. Whether it's your credit score jumping up 10 points, you adding $20 to your savings or a down payment, whatever those steps may be, consistency, consistency, consistency over time, wins, wins, wins over time is going to get you to that goal. So I'm gonna check the comments really quick, see if anybody dropped anything below.
And just to add to that, right? This journey is a gradual one. A lot of the times people think of home ownership as either it works or it doesn't, or it happens or it doesn't. But the reality is that just like building a house, the foundation has to come before the roof. And unless you're consistent building the pieces in between, you'll never get to completion. So we want to celebrate every piece of drywall that's put up. We want to celebrate every piece of flooring that's laid down. We want to celebrate every toilet bowl and dishwasher that's put into that for, proverbial home, and that could be saving a few dollars a week. It could be paying off a few dollars of debt, but that consistent accumulation equals to bigger steps. So that's really what we want to celebrate and just make sure that as you go, you're making the progress that's going to make the difference in the end. All right. So feel free to drop your progress as you go. If you bump into this next week or week, whatever it is, you just go ahead and share what you're doing and what worked for you, so we can celebrate you as you keep on your journey.
And so your home loan, we're going to talk on these 5 points here in the process: the mortgage process, questions to answer, your debt to income ratio, loan programs, and your down payment programs. So, do you want to take it from there?
Well, no, you could go ahead with the slides. I'll jump in a few.
Oh, okay, perfect. All right, perfect, perfect. All right, so for the mortgage process can be short and painless or long and stressful. It will usually come down to you and how prepared you are for your journey. So here are some steps that you can walk through. We also are about to launch our Home Buyer Academy, the book for Home Buyer Academy, and it's coming very, very soon. This is a part of that where you can take these steps towards making sure you have all your ducks in a row. So step one, consult with a mortgage consultant about your application, like Chad Murray. Get information and gather documentation, and we're going to give you that every step of the way. Obtain a pre-approval for your loan. Uh, find a home. Have a property inspection. Lend Get a lender. Lenders will order that third party service for you if you have the right lender and they know what they're doing. Uh, then you get the home, and then the lender gets an update. And then now it's time for you to prepare for the closing review. And then last, it's time for the escrow signing, and then you're closing on your home. So those are the steps of what it looks like mapped out for the mortgage process.
Yeah, so that's an overview of everything. And again, as we go through this journey, y'all, questions that come around, please feel free to put them in the chat so we could address you right where you are in your specific part of the journey. Because some people might be caught up on the pre-approval process because their credit might not be there. Other people might be at a point where they've submitted an offer and they're not too sure if they have enough money for closing or if they can save some money for closing. And that's what we're here to help you with. So don't leave any of those questions unanswered. Come to Homebuyer Academy so those could be addressed, so your home buyer journey could be a good one.
All right, when it comes to questions to answer, there's a set of questions that you will need to answer and have verified by your lender in order to be approved for your mortgage loan.
Right.
And so if
So
I can, yeah, go
ultimately,
ahead.
yeah. So ultimately, with your loan application, and this is very important, when you actually start your loan process, you want to be as thorough as possible with your loan officer, because the more detail and information that you give them up front, the less work we have to do on the back end. Because what happens is oftentimes, a lender is going to tell you the whole checklist of all that you need, and you might have some information about other things that you're saying, that might not be important, but you'll be surprised what ends up coming out of the woodworks during the loan process. So the more transparent you are with your loan officer up front, it's going to give us the tools to be able to be prepared to make sure that this process is as smooth as possible, because we'll be able to get ahead of the inevitable questions that are to come, have all of the documentation in advance, rather than trying to scramble the week of closing to get you wrapped up. So just keep that in mind as you go. And a lot of the questions that are going to be asked are going to be everything from your income, everything from your assets, everything from your credit. So a good example of that is if you have any large deposits, for example, a lender is going to want you to be able to show where your money is coming from to close. So to avert any kind of issues, if let's say you got a large deposit from an inheritance, for example, You just want to be able to show the document trail of where the money came from and have a letter of explanation to explain why this money came, and to also let the bank understand that it was a one-time occurrence, or if it's money that's consistent, like child support or something, you want to be able to share that so that your loan officer is prepared to present all documentation and narratives to help your loan go smooth.
All right, so next is your debt to income ratio, also known as the DTI, which is used to determine how much home you can afford. Knowing this helps you streamline your search to homes within your price range. And so you may be
Yeah,
wondering exactly what compiles in a debt to income ratio. So I'm gonna pass that over to you.
right. So the thing about it is, like you said, Mo, we want your search to be targeted. A lot of the time, people have caviar taste and maybe beer money, and that's okay. But we don't
Mhm.
want you looking at mansions if you can't afford that, because it's going to be a waste of
Exactly.
time for your real estate agent and a waste of time for you. We want you to set targets that might be a stretch but are realistic at the same time. So if you know that you want to live in a particular neighborhood, let's go ahead and pre-qualify you so we could take a look at where you are. And here's how it really works. Your debt to income ratio is your gross monthly debt divided by your gross monthly income. All right. Now that is going to present the ratio of what your debt to income is going to be. Now, lenders prefer an ideal housing ratio, meaning that your housing expense, meaning your mortgage, your insurance, your taxes, your mortgage insurance, they would love to see it at 28% or less. But a
Mhm.
great rule of thumb to understand is that you can borrow up to a payment that's going to leave you with a 50% debt to income ratio, meaning that whatever your gross monthly rent is, I'm sorry, your gross monthly income is, let's say you make $6,000 a month, all of your debt, including your new mortgage payment, your car payment, your credit cards, can come up to $3,000 max. Anything below that, you're in good stead. If it comes up to 3,200, that means you can't afford that house. And we would have to actually lower the price point in which you're searching, right? But that 50% mark is pretty much going to be safe under most circumstances. We just want to make sure that if that doesn't suit your needs, what we get to do is look at what debts you could eliminate over the course of time
Mhm.
to be increase how much purchasing power you're going to have. You feel me?
Yeah, and I
So
want to just
that's
add.
ultimately,
Oh,
yeah, go ahead.
Um, I- no, I was just going to add to that that a lot of people get discouraged when they look at a debt to income ratio and they see like they may have a high debt to income ratio, but look at that as your calculated friend, right? Because
Right,
when it comes to the home buying process, you don't want to feel like overwhelmed and stressed. If it's looking
right,
high, we're going to want to bring that down. Like the lower that number is, the more comfortable you are, and honestly, if you have a high income ratio, what you're looking at getting, if we're a good team member, as we talked about last week, we're going to say, hey, you have a pretty high debt to income ratio. Let's look at something in your price range, so you're not stressing down the line. Like this can
right,
prevent so much hardship. You talk about, understanding debt to income ratio before you buy can prevent a foreclosure a year or two from now.
right. And here's a big thing about it too, right? Your debt to income ratio is only calculating the things on your credit report and your mortgage. It doesn't
Hmm.
talk about your landscaping bill. It doesn't talk about your pool costs, right? Like
Hmm.
I'm outside in my backyard and my pool's right here, and I got it nice and blue today, Mo. Look real good. You remember how it was a couple days ago?
Oh yeah.
It's beautiful right now. They don't talk about that, right?
Hmm.
Because that means we have to buy um, chlorine, a bunch of chlorine every month. We got to get the acid. Now I'm a pool guy all of a sudden, you know what I'm saying? I know
Hmm.
my thing, but these are things that come up in expenses around home ownership, which you have to consider, but don't come up in the calculation. So you want to be as conservative as possible and
Hmm.
not really overextend yourself so you're spending more money on the house and not considering everything else that's going to come with it.
Like HOA. I'm privileged, so I don't cut my own grass. I got somebody for that, and to stay in compliance, they got to do at least 2 weeks or less, and I got chickens, I got a garden, I got so all those
Right,
things add up. Like it's more than just a house. It's this is just the basic. Yeah, when you start adding up
right.
all those other things, especially where you are in
It's
Florida,
like a
you might need a
car.
pool.
Right,
I'm sorry.
like
Yeah,
it's like a car. When you look at the sticker price and when you leave off the lot, you done spend $10,000 more than you thought. So
exactly.
keep that in mind when you're buying your house. All right.
Yeah, and then here's some loan programs. The first one we're going to talk about is the FHA. Minimum credit score for that is a 580. The minimum down payment that you would need for that is at least 3.5%. The loan limits could be anywhere from 421K to 97, uh, 971. My apologies. The loan terms can be 15 to 30 years, and your mortgage insurance is monthly. So you will have
So
mortgage
so
insurance. Go ahead.
yeah. So keep this in mind, right? A lot of people really, when they're looking to buy a house, the thought for whatever reason is the credit score has to be phenomenal. Not true. Not true at all. With the FHA program in particular, it really highlights it as low as a 580 score, and that's legitimate. If you have a 580 credit score, you're in the game, right? So it really just takes you making a commitment. You could get there, and also those loan limits have increased because this is pretty much outdated from last year. So we can increase that as well. But then 3.5% down. A lot of people think that they need 20% down to buy a house. Now you need 20% to not have any mortgage insurance. Oh, but just 3.5% down gets you in the game. So just keep that in mind as well.
Mhm. Next, we have the conventional loan. The minimum credit score for that is a 640. Your minimum down payment that you can pay on that is 3%. It does also have a range from 726,000 to 1 million. Your loan term can be anywhere from 8 to 30 years, and this one does have mortgage insurance if your down payment is less than 20. So if you do the 3%, you will need insurance. If you do the 20% down payment or more, then you won't need mortgage insurance on that.
The good thing about a conventional mortgage is we could actually go down as low as a 620 credit score
Hmm.
when you have compensating factors. So, like, man, listen, there's nothing stopping you from getting this house.
Right. And going back to like what we talked about credits snowballing and those little things where your credit can jump from like a 580 to a 620 within a month if you do it right, if you pay out the right things and approach your credit the right way. So those are
Right,
just some things to keep in mind. You might see these numbers and say, "Hey, I might not be there," or "I'm way above that." And just seeing
right.
this in front of you, you might have the confidence to say, "You know what? I actually can go for it and buy." Next is a VA loan. Minimum for that is 580. There is no down payment and no mortgage insurance.
Yeah,
Now
man, the
for
VA loan is powerful. If you are a veteran, man, home ownership is right there. You just got to take the time to put yourself together to
mhm,
make it happen, and it's so realistic, so practical. It happens every day. So yeah, and the debt to income ratio, especially based on your VA benefit, if you
mhm,
are service disabled or partially disabled, like your debt to income ratio can go as high as like a 68 or even higher. There is no limitation per se. It's going to be a case by case basis, but you're going to get a
mhm.
lot of latitude to be able to move into a house that you want based on how much you get on your VA benefits. So it's pretty dope.
Yeah, and I think for the approval, most just from what I remember in the bank, most veterans all you need is your DD 214
Yeah.
just as your proof, and start the application process from there, and the approval process is pretty simple from there. And then last one that we have on here is a USDA loan. This is the income doesn't exceed 150% of the median income. U.S. property as prime residency, and you must be a U.S. citizen, non-citizen, national, or qualified alien. So this is
Yeah.
probably
So
one of the. Oh, go ahead. No, go ahead.
yeah, I was just gonna say that a USDA loan, it also is based on a particular eligibility based on where you are. This is
Yeah.
gonna be for areas that are rural. So you're not gonna get a USDA loan in the middle of the city. but you'll be surprised what areas are considered rural, especially here in Florida. With all of this growth going on, as
Mm-hmm.
much as the place is expanding, a lot of areas that are pretty well developed still would qualify you for a USDA loan, which
Mm-hmm.
doesn't require a down payment as well. So you could get this 0% down loan on a house in an area that you very well would want to live in that isn't necessarily all cows and chickens.
Mm-hmm.
And that's no shot at you, bro. I love your chickens. Your chickens are cool with me and their eggs are delicious. But you could find yourself where you want to be with the zero
Mm-hmm.
percent down based on the USDA loan. So that's something to look at as well.
Yeah, I was like one count, like not county, but like one like block, oh, probably like a
Really?
couple miles over. Yeah, like it was like the next community over. Had like
You can get
USDA.
a USDA loan in Leesburg?
Yeah, it's like pockets because I'm like where I'm at. I'm
Oh
close to
wow, that's
Eustis,
crazy.
so it's like yeah, it was like I think there's certain areas that's why you got to know like the areas because I believe like in Eustis near Leesburg there are some USDA areas. So
Okay, okay. Wow, I
yeah,
thought that you were given. You were, but okay, cool. All right, and here's the thing too, right? So we're talking about a few different programs that require low or no down payment.
mm-hmm.
If you are in a position where even 5% down for a conventional mortgage or an FHA mortgage for 3.5 is a stretch and you need some more support with maybe closing costs, there are a lot of other programs that could help you out. Now, here in Florida, we have Hometown Heroes program, which isn't available right now, but the different counties, particularly Orange County, Seminole
Mm-hmm.
County, Lake County's tight with money. A lot of these other counties are tight, and it's almost like if you make enough money to qualify for a house, you make too much money for down payment assistance. But
Right.
then there are programs like the Chinoa Fund, which it allows you great down payment assistance perks. The only thing is that you pay for it. So you end up with a high second mortgage interest rate. But then you have to ask yourself, is it worth me getting into this house today and then having my equity build up over the course of the next 2, 3 years? And then from there, being able to refinance and pay that second mortgage off. So the truth of the matter is you want to explore all options before you put yourself in a box and say, I'm not ready to buy or I'm waiting for this. Go ahead and
Mm-hmm.
ask those questions in advance, get pre-approved and pre-qualified, or even speak to somebody as well before you think you're ready, and you'll be surprised how close you are.
All right, before we go into our questions to see if you guys have been paying attention, we're going to open up the floor here to see if you have any questions. No matter where you're watching from, just drop a comment below. Let us know what questions that you have about any of this stuff. Um, and I'm also going to drop the link in here really quick where you can connect with us even further, homebuyeracademy.org.
Yeah, so in terms of homebuyeracademy.org, what we're doing is we're taking the show on the road. So if you are with the church, if your company is looking for enrichment programs, let us know because we have a whole system designed around homebuyer education. So we don't just do this here on Thursday night, but we have a whole system that includes a book, workbook, um, online course, and these are things that could you could have access to through the system. Your organization could have access to be able to really get closer to your home buying goals.
Mhm. And yeah, so if you visit homebuyeracademy.org, this is another way, like he was saying, you can connect with us because not only do we provide that information, but we're doing a campaign right now, especially for churches, where we'll come out and speak for free. We want to connect with you guys. We want to show people like this information is readily available, and you have access to this. All you have to do is ask, and we will show up and we will give this information to you guys live. We can even tailor a special program about the home buying process to your organization, depending on what you guys are looking to do. Will be happily and readily available to do that.
All right, cool. So go ahead. Let's get into those questions.
All right. Number one, and you guys can drop a comment below. It says, "How can you improve your financial readiness to secure a mortgage?" I'll give you guys a minute to do that, maybe 5 seconds. The question number 2 is, what monthly mortgage amount would fit comfortably within your budget while allowing you to cover other financial obligations? These are more like goal setting questions based on what we have been talking about tonight. The last one, have you explored all of your loan options to determine which best suits your needs?
So let's get those questions answered, right? So when you think about it, right, like the things that you do to get yourself more ready, focus on
Mm-hmm.
these 3 areas. You always want to be able to always push your income at work. I mean, it's the American way, capitalism, right? The
Right.
more money, the more options. The better the finances, the stronger your options are going to be in every phase of life, especially when it comes to buying your next house, right? So we want to focus on credit, we want to focus on your income and your assets. Savings
Mm-hmm.
is key, but also being aware of the different opportunities in terms of down payment assistance, and also working with a very strong real estate agent that could have you get money from the seller towards your closing costs. Really big deal, and it can help you go a long way. All right.
And then also
And
keep
then
in
you want to
mind.
ask
Okay.
yourself, yeah, go ahead, bro.
No, I was just gonna say, keep in mind, and I think this is where you're probably gonna go to for the second part is, you want to be real with yourself, right? You want to look at your income and be honest with where you are. And if you say if you're renting and you can manage where you're renting, you don't want to prematurely buy something that's out of your price range if you really can't afford it. There are some realtors that really want to get a sale so bad that they will help you get into a house that you really can't afford in the first place. And so just keep that in mind when you're looking at your budget. Be real with yourself and say, hey, I could only afford a $200,000 home. And everywhere I've looked at, I'm not liking none of these communities. So take your time with that.
Yeah, take your time, but use that motivation to increase your income.
Yes.
I've spoken to clients who I've seen working at the same job for 20 years, knowing that that job won't can't afford their dreams. They're working at a job that has limited their possibility to advance. You got to trust yourself.
Mhm.
You got to trust that someone's going to see valuable to put that much time into work and your skill set. And if you don't have the skill set, you have to do what it takes, whether it's certifications, more education, networking. Go ahead and get the money because it's out there. Opportunities out there, but you have to get it so that your income equals your dreams.
Mhm. And
All
we will
right. And
help
then from
you.
there, yeah, and we're here to help you. And we'll be able to explore all of the loan options with you. All
Mhm.
right.
All right, perfect. So anyone that's been watching, I know you guys are kind of quiet in the comments because you guys this might be new to guys, but this last part, if you're watching, it don't even have to be again towards your home buying, but we do want to set some goals. You might be wanting to start a business, right? I'm just throwing that out there as an example on why this is still important to save money, build credit, reduce debt. Any of these things that we talked about tonight, uh, our primary focus is to educate you in the home buying process, but there could be other goals that you have. If you're looking to buy a home, I want you guys to look at these questions really quick and kind of see what you can improve between now and next week, right? You can plan
And go
for,
ahead and
okay,
set something.
yeah, and go
Go
ahead
ahead
and
and set it.
no, go ahead.
Yeah, go ahead and set a goal. Again, and
Hmm.
it doesn't have to be a big goal, and that's what I really want people to understand. This journey, we don't have to worry about buying a house tomorrow. It's not, you don't lose if you don't buy it tomorrow. Or if you're in a lease and you're hoping that you could buy before your lease expires, that kind of pressure doesn't always work out. So what I would say is just take your time and take steps forward and ask yourself, what is my goal for this week? Am I
Hmm.
going to set a target to save an amount of money? Am I going to set a target to have my credit increase gradually? Am I going to set a target to reduce some debt? Whatever that
Hmm.
may be to you, get connected to what that goal is and go ahead and declare it. Declare it in your own lives and go ahead and declare it in the chat so we can hold you accountable to that goal.
And I'm gonna drop our group here. And make sure you just type in the search bar on Facebook. Go to Facebook and type in 2025 Home Buyers Club. And the reason why you need to join this club is because we're going to keep you honest, we're going to keep you up to date, and we're going to give you strategies. Whether it's paying down your debt, we're going to talk about the debt snowballing, for example, saving a little bit. You don't want to save beyond your means, right? Because you don't want to put $50 aside if you know you're going to pull it back out of your savings. Maybe do 20 until you can get used to that, and then do 30 and work your way up. And there's all these little strategies that we're going to be giving you every day, every week, so make sure you join that group, the 2025 Home Buyers Club. And again, I keep saying this because you can get so much helpful information because you can help somebody. Maybe you know somebody that's wanting to buy a home. This would be essential for you. Maybe you're looking to buy a home next year. Just because it says 2025 don't mean you can't prepare for 2026. So I definitely want you guys to join that group and get locked in.
Cool, man. So that's the slide presentation. But what we're gonna do is we're gonna also talk about some scenarios. We're gonna talk about some scenarios that came up or are coming up in the news. And I'm gonna tell you one thing that I wanted to jump into, Mo, is
Hmm.
I have clients that are consistently concerned and they're always asking about um what happens if I buy a house and my payments go up? Why does that happen? Right? And
Hmm.
what I wanted to just bring up is the escrow shortage. So we spoke about not buying beyond your means, right? Because what does happen to many buyers when they start their process of going through their home journey, they buy the house a year or two later, they end up getting hit with a big bill where now their mortgage payment is going up by two, three, four, $500.
Hmm.
And they're like, yo, I thought I had a fixed rate mortgage. What happened? What
Right.
happens is your taxes and insurance increase over time. And when your taxes and your insurance increase, but that increase isn't accounted for in the escrow payment that you're making on a monthly basis, that means that you're going to run into an inevitable shortage. When you close on your home, at closing, the title company is going to take at least 6 months in advance for taxes, at least
Hmm.
3 months in advance for insurance, right? And now, as you make your monthly mortgage payment outside of your principal and interest, which is going to the bank, your taxes and insurance that escrow account.
Hmm.
And when the escrow account starts to run low, the bank wants to replenish it. So they're going to hit you with higher monthly payments to accommodate for that escrow shortage. So, what you can do when you're looking to buy your house is you want to speak to your realtor, speak to the title company, and
Hmm.
make sure that they take as much money as possible in the closing without putting you under stress, right? Because that's the thing. A lot of people want to be able to close with as little money out of pocket, but it comes at a cost. If you cut corners in terms of building your escrow up front, now you're in a position that it's inevitable that your taxes and your taxes and insurance go up and your mortgage payment goes up. To avert that, a few things you can do. Number one, you have to apply for a homestead exemption. Apply for your homestead exemption or the equivalent in your town of a homestead exemption, which means that I live in. It's going to give you a tax benefit and a tax break. Also, once you get your homestead exemption, every year you have the ability to grieve your taxes, which means that you're going to go to the tax board and explain to them why your taxes shouldn't be going up. Now, you
Hmm.
won't win all the time. It won't always work in your favor, but you want to give yourself every opportunity to save every dollar because it adds up. So don't be taken by surprise by an escrow shortage. Do all you can to reduce how much you're paying in taxes and reduce how much you're paying in insurance. In terms of insurance, you can shop for cheaper insurance quotes. Just make sure you get adequate coverage. But those are the big things that you can do to really put yourself forward to allow yourself to save more money and not really have to be burdened by that escrow shortage.
Hmm.
Did that has that ever happened to you?
So that actually just happened recently, and I think that's been happening to a lot of people just because of
Yeah,
the
yeah.
tax because of what was it? What's that word? It's a simple word. Cost of living. All the rates going up over
Okay.
like the last year. Cost of living. Yeah, I don't know why I got a brain fog then, but yeah, because of that, it paid over to uh, escrow. So there was a shortage, but they pulled it out of the fund. So usually, depending on like the year, if you're already paying into your escrow, you might get like a little money back at the end of the year, at the start of the year, or if you're at a shortage, the reservoir in that fund will be paid into the like escrow to cover that. Like if you have a certain amount. So that's kind of like that's something I'm still like learning on the escrow side because like when you pay into
Yeah, well, they're gonna keep on adding to the account,
right,
right? So they're gonna keep the money rather than sending it back because they're gonna need it back. So they're gonna
right,
just keep on, either they charge you more money or you could be proactive, right? If you know your taxes went up, you know it's
hmm
gonna go up, so you know what's happening. So rather than waiting for them to actually overbill you and overhit you, you could actually pay the difference directly to your escrows. You can reach out to the
hmm
bank and work that out so that you don't find yourself in a position that you're involuntarily hit with this extra amount of money every single month. So be
It's,
proactive is what I'll say. You'll get ample notification. You'll get at least a month or two in advance notice. And when you get it,
mhm.
don't just call like, what happened? What happened? Because that's what happened. What you want to figure out is how you can solve it. And the way you can solve it, homestead exemption, read your taxes. Once you
Mhm.
get your home exemption, you send that into the bank so they see the difference in your tax bill. You also send the new grievance to the bank once it comes through, and then also you could be proactive in paying more if you get the tax bill and you know that it increases. And your taxes are going to
Mhm.
go up every at least every 2 years. In
At
many
least two
cases, it
point
goes
five
up
percent.
every year. You know what I mean? So you never know what it's going to be. So you want to just be mindful and be on point. And once you're on point, you'll be able to avert a lot of those kind of issues that could, catch some people off guard.
Yeah, because what will happen too, just like you're saying, because if that goes up like say 2%, 2.5%, your say your monthly mortgage. 'Cause people like I have a fixed mortgage and I should be only paying, let's say
Right.
1,600 per month, right? But because of the overage, they, if they expand it on the year, now your mortgage is 1620, and then if that keeps happening because you're not doing what you need to do, it's actually going to keep going up, and you're going to be wondering why is my mortgage payment going up? Like Chad's been saying, but if you can be preemptive and just pay that extra 2%, 2.5%, the extra $50, $100 if you can, not only will you prevent that shortage where you have to pay that back, but you can also that little bit of extra payment over time will help decrease the amount of years that you're going to have on your mortgage long term. Like paying the extra 100, and that's another conversation for a
Yeah, but
different
that's
day.
two different things. Yeah, you're mixing up
Yeah,
two
that's what I'm
different
saying.
things.
That's what I'm saying.
You
That's
know
another
what I'm
thing
saying?
for a different
Yeah,
day. Yeah.
yeah. Because I mean, now we talking about paying down balances and all of that, but like, just
Yeah, no, no, no.
you
I'm
know
not
what I'm
gonna get deep.
saying?
I'm not gonna get in the weeds with that yet.
Yeah, you don't want to get too in the weeds there, but yeah. And if you do have those questions, you could always reach out to us, and we'll be
Mm-hmm.
able to break down the specifics in a way that's gonna help you to actually have an impact today, right?
Mm-hmm.
So, but yeah, bro. The office is under construction, and I thought it was a brilliant idea to be outside because daylight savings and all of that. But look like I ran out of daylight savings, and I'm all teeth right now.
Yeah, you got. Yeah, so yeah, we might wrap it up before it's just
Yeah, it's because it's just
teeth and
all smiles
eyes.
and eyeballs.
Yeah, smile. All right, but if
Yeah.
there's no more questions, you guys see the caption below. Homebuyer Academy Live. Join the 2025 Homebuyers Club on Facebook. We're gonna catch you guys again next Tuesday. And if you join the group, what we will also do is, as you guys leave questions and comments in there, we'll bring those live here on Tuesday. We'll just go through that, compile that list of what you guys asked us in that group. If we don't answer in the group, we'll talk about it here live.
Awesome. And yeah, we're gonna be leaving updates on the markets,
Hmm
updates on what's happening in real estate in your town. So you just let us know where you are, and we'll be able to provide you information that you want to be on top of, so that as your
hmm
home buying journey commences, that you're prepared to take it on step by step.
Yeah, so we're here for you guys. We're here to help you, bring you hope in the home buying market. So if there's nothing else you want to close us out, Chad?
Man, listen, it's just really cool to be here, bro. And I'm feeling the new digs. And I mean, listen, we're gonna be here every week, so it's gonna get better and better and better. And we're gonna be more and more prepared to give you what you need. So please give us feedback, give us information on what we can do to serve you right where you are.
And wherever you watch it from, hit that like button, subscribe, and catch you guys next time.